you're actually at 199 new homes. So almost say 200 new ones hit the market, 100 left. So again, inventory continues to build across all of Durham. And I'll go over that a little bit more later on. So Pickering actually had a really quiet week, only 16 homes sold in Pickering. You're going to see it right here in the middle. And if you're looking at price point for Pickering, it's on the lower side too. So a lot of Pickering's inventory is sitting in that 1.4 and well above there. Meanwhile, they're only selling between that really 1.1 and under to $1 million. Is that report large enough for you guys to see? Or should we make it a little bit larger?
Larger will be nice, please.
Okay,
Thank you.
perfect. That better? Okay, perfect.
Yeah, that's all.
So you'll see where it sold last week, again, in the lower price points for Pickering, just over $1 million up to $1.2 million. They only had 16 homes sell, and again, 65 new ones hit the market. So not very good for them. Ajax was a better story. Ajax seems to be outperforming Pickering the last few weeks. So this past week, again, 30 new homes hit the market, 62 new homes hit the market, 30 went firm sales, 16 conditional. But the good thing we're seeing is when inventory turnover was down last week, we bounced right back up to that 11.5%, 12%. Again, we want this typically to be that 16 to 18% given this time of year. Again, price points pretty standard for Ajax, a little bit on the lower side. I do expect to see this kind of jump up the next couple of weeks into that 1.1, 1.2, and early into the 1.3s. The nice thing though is if you look at terminated and price changes, while inventory is building, we're not seeing the number of homes doing terminations and relists or price drops dramatically increase. So again, inventory being high can actually be a positive thing. It's showing us that we have people that want to move. We're not seeing desperation on those people yet because again, if they are starting to get desperate, we'll start seeing the terminations and the price changes start going up. But if you review for the last few weeks, you're pretty standard there right now. We'll flip into Whitby. So Whitby, 105 new listings, 21 conditional, 37 sales. So again, Whitby's been holding nice and strong. I compared these numbers to last year, and we're actually right on par with last year. So typically at this time of the year, we're having about 43 sales. It was really 40, 43, 41. So 37 is not too far off compared to some of the other cities. Again, if we look at the price points, we're still nicely over that $1 million mark, not as strong as what last week was. Last week, we literally had home sales in every single price bracket on the left-hand side. Terminations and price changes, again, holding steady, pretty common, nothing crazy out of there. But a really positive thing is if you look in the top right corner, again, as we see a lot of different strategies right now, people holding off, people pricing high, people pricing at market value. The good news is 51% of the inventory last week actually sold over the list price. So that is one thing that I'm trying to keep an eye on right now, as we know people want to buy. We're trying to figure out, sorry, Patricia, let me make this bigger for you. There you go. As we're seeing different strategies and different things going on, one thing that I'm trying to see is if we hold off on offers, is it getting more successful week after week? I personally know a lot of clients that were hesitant towards this strategy at the start of the year, but if it becomes more common, people may realize they don't have a choice and they may actually have to transact. So something to keep an eye on is how many homes are selling overpriced. If that continues to increase, just make sure you do your due diligence and double check to see how much are those homes selling overpriced. Is it 5,000, 20,000, 100,000? We're starting to see quite commonly it's that 100,000 range. So $75,000 to $100,000 is not uncommon right now. Inventory turnover is low, again, because of the amount of inventory we have. 415 homes is quite high for Whitby. That would be one of their peaks that they've had in the last few years. So inventory turnover is only 8.92. And again, we want to see that get up to that 14, 16, 18% rate. In Oshawa, so I just have to make it a little bit smaller. Oshawa, we had 130 homes hit. So the interesting thing is Oshawa usually has considerably more homes than what Whitby does. So the fact that Whitby had 105 homes and Oshawa only had 130 is something to keep an eye on. Whitby, this may be just a strong couple weeks for them where they're bulking up on their inventory. Oshawa is usually around that 130, 125, so nothing uncommon for them. Price points, we're seeing good price points actually, and it's starting to creep up over that $1 million. That's where we want to see as we get into further into spring market, into the summer. Again, the higher it goes, the better for us. Right now, a lot of it is still fairly low, but we're starting to see some over the $1 million. In terms of inventory turnover, 7%. Again, that's really half of where we want it to be. And then our over list, 43%. So nice and kind of steady to where it's been. Clarington. Clarington, to me, actually had a little bit more of an off week. Price points is what I was kind of really looking at. I would expect more homes to be selling at higher price brackets in Clarington. So whether it's Curtis or North Bowmanville compared to Oshawa. So we're actually seeing more homes sell at a higher price point in Clarington, or sorry, in Oshawa than we are in Clarington. The other thing to keep an eye on is they were only 38% over list price right now. So again, where we were seeing 50% in the other cities, they're actually well below that. So something to keep an eye on as well. Unless people have particular questions about the report, I'm going to jump off off this report because it's something that we cover fairly regularly, and I think you guys can start analyzing trends. But before I do so, does anyone have any particular questions about any of that information? No. To be honest, we're kind of really just seeing the status quo. I think, again, give it another week to 2 weeks and we should see things picking up. So over the last couple of weeks, I keep comparing everything to last year's data and even into 2022, just to see where the trends are. And I think that we were about 2 to 3 weeks behind. So typically we would have picked up last week. Again, if we don't start increasing our numbers, then we know that we'll be trending further behind.
Sorry, Nat, can I ask a question on the Ajax report? I'm having a listing presentation today. I just wanted to look at, we're going to talk about pricing strategy, and I want to look at the top right-hand corner.
Yeah, so Ajax, let me just
I'll be really quick, not to eat up all your time.
Yeah, no worries.
So just a little bit of background. We have a 3-bed. It's not all of it hasn't been renovated. I think we're going to sell in the high 8s. I want to do a holding offers at $799 to get traction. She absolutely hates the idea, but looking, and I actually want to pull a report up to see all the sales that have recently sold, just to see that. And if I look at from mid-April all the way today, I mean, we had 60, 52, 57. The trend is everyone's listing low, holding offers, and they're in that sweet spot of 800 to 900. That's where all the activity is. So I mean, 849, I'm not going to sit there and hold like push my agenda. I'm going to talk about them. I think both of them would be a good strategy, 799, or even go in that sweet spot, 849. And if they got if they got the high 8s and maybe something with the 9, they'd be over the moon. Is
Yes.
One strategy to talk about them better than the other in this case? So I asked that to the group. What are their thoughts?
So I think anytime I'm having this conversation with someone, it's kind of understanding where are they coming from in their rationale. So what scares them, because unless you figure out what it is that scares them about that, you can't really overcome that objection. So most clients' fear of that is thinking, oh my gosh, what happens if I don't get the purchase price that I want? Do I have to accept it? To me, I go into this conversation and say there's multiple strategies, and the reason why we take each strategy is for X reason. So when I've done the holding off, I've told clients, right now, inventory is high. So right now, inventory in Ajax is plus 70% this year compared to last year. So I'd say inventory is up 70%. You can pull the list of homes that are currently like market competition or
Sorry, Nat,
comparables.
where do you see that 70%? Are you doing a mental number between the total listings and new listings?
I'll show you on the next report. That's where
Okay.
I pulled it from.
Okay.
So right now, inventory in Ajax is up 70%. Sales are only down in April 1%. So not too bad, but pull the amount of competition and show them. So pull the absorption rate and say, you have X amount of homes listed in your price bracket right now. The reason why we do this strategy to hold off is to give that sense of urgency to the buyer. Right now, a buyer is seeing more and more inventory hitting the market every week. The good news is your house is actually more updated, has more of the features that people are going to want, is in the neighborhood that people are going to want. So if we price low, hold off, people are going to be worried that they're going to miss out on it. Now, doing this, we have to play a game. And some people like the game, some people don't. The reason why we play this game is because we have to leverage more offers. So the goal is to get 8, 10 offers. And if we do so, the top 2 offers, 1 and 2, they think they're competing against 10 offers in total. They're actually only competing against maybe 1, 2, because the other ones are low. However, they don't have that information. What this does is it gives you the benefit of choosing your closing date. You're really seeing how much that home is worth it to someone else, and you're not having conditions. So again, conditions are always a way of someone getting out of a deal, right? That's typically what I go into, and I would pull up this report and show your clients 57% of the homes last week went over, 52 went over the week before, 52 the week before that, 60 and 48. We know that on average right now, more than half of the inventory is selling over. But in order to do so, we have to price your home aggressively. We can't do it $50,000. $50,000 actually just looks like we're selling it in a reasonable price range. People think prices should be dropping. So if we have dropped just that little bit of amount, they may think that we want that. We have to make it very obvious that we're going well over. But then ask them, where are you staying in your, are you staying in your home during this? Because you have to create the right experience for them. If they have nowhere to go and they're going to be out all the time, they may not be too happy with you. That makes sense, Roger?
Yeah, that's awesome. Yeah, no, they've already moved into the condo. The house is vacant.
Okay.
We need to sell it right away. So
Yep.
Yeah, no, I get it. All those things are great. You've basically just reassured everything that I've basically told them in before, and now I'm going to have that officially with the entire family there.
And
Fantastic.
the absorption chart is also online, so pull that one and use that with them to go over it as well. The next report I'm going to show you guys here, this one we have not done at all. This one requires a little bit more explaining than what absorption does. So absorption literally is just how many homes are listed in a price bracket, how many homes sell in a certain price bracket. This one, okay, perfect. You guys should be able to see here. Just look on my screen. So I'm going to use Ajax and Pickering here as well. Everyone can see the report, it's large enough? So this report, guys, it is going to track your average sale price for the past year and a half, given a detached home in each and every city. So the first section here is going to be your months on the left-hand side. And I forgot to update to April, so I'll fix that. Your middle column is going to be the average sale price for the detached home. Your left side is how much a home is increasing or decreasing on a monthly basis. So it's a dollar value. So again, plus minus over the last month. Your right-hand side is comparing this year to last year. So if we look at Pickering, its average sale price was 1.245 million. It is actually up 1.3% compared to last year, which is a positive thing. And compared to the last month, we were up $17,500. Make sense? Roger, I'm going to use you as an example as well. So average sale price for April and Ajax was $1,050,000. Let's round up. You're pretty much flat. You're down 0.5% compared to last year. The good news is up $5,000 compared to last month. So you do always want to take a look at where you are trending, because sometimes you'll see, okay, we're down $31,000 and your client's going to be nervous about that. But you can say, okay, we were up 52,000 before. And the nice thing about this report is it really kind of shows you in a graphic form of what is actually happening. So red is going to be Ajax average sale price. And again, you'll see your seasonal dips in the summertime and in the winter. But for really the last 6 months, we've been fairly flat, up and down a little bit. Pickering has been a little bit more hit and miss. And then to Raj's point before, where I got the information about inventory, on the bottom of this report, it takes your active sales and your active listings, which determine your months of supply. So in order to get your months of supply, you just take your active listings and divide it by the number of sales. So inventory is going up. So from last month to this month, we went from 2 months of inventory to just over 2 months and a quarter. So to Roger's point, he may have a conversation with his client and say, okay, we know right now supply of homes is going up. We went from 103 homes to 178. With that extra inventory, that means we have more competition, but right now we're not seeing the demand. So sales did go up a little bit this year, or sorry, month to month, but not really the same kind of percentage to the active new listings that hit the market. So in order to be competitive, let's try this approach of let's hold off on offers, price it super low so that we can get that multiple offer and hopefully drive the price up to a price that you're happy with. The good news is if you don't get the price you want, we can always take the house off the market. We've got feedback from clients that have been through the home, and now we know where we can price it. If they're giving you feedback about, okay, the kitchen smells, or it's a little bit dark, or certain little things, you also have that opportunity to relist the home and make those modifications before actually coming to the market. So it's kind of a little bit of a win-win in my opinion. In order to get your increase or decrease in inventory, what you're going to do is you're going to take your number of active listings this month, so April 2025, 232, divided by last year, 127, and then minus 1, and that's what gave me the inventory of up 70. So just a quick little overview, give you an idea of where inventory is sitting at. Pickering is up 83% in inventory. Ajax 70, Whitby 71, Oshawa 76, Clarington 36%, and then Coburg and Port Hope were at 23% and 39%. So on average, we have more than half the inventory has increased. Interesting to take a look at sales just to kind of see where we've compared to last year. Pickering is only down 7%. So when you're hearing that the market is horrible, you can actually tell your clients it's actually not that bad right now. To be down 7% is not horrible. We would like it to be higher. Ajax only down 1%. Whitby is one of our big places that's down 21% sales this year compared to last year. Oshawa minus 11, Clarington minus 30, Port Hope is up 21%, and Coburg was up 7%. So lots of mixed numbers in there. The one thing that I'll tell you that I feel confident in is if you look at our inventory, it means 83% more people in Pickering want to sell this year and trust the market more this year than they did last year. So it comes down to their motivation, but the good news is there's a lot more people that want to transact this year. So that means we just have to go out there and get it. Again, if you're representing buyers, use this information and try to use it as leverage and to kind of scare the sellers on the homes that you want. Make your case, put it together like a business plan. So your inventory's up 80%, sales are down, my clients are coming in with an all cash offer, no conditions. Use your comps to show them that they may be priced high. Do whatever you need to do to really try to drive that price down. Again, if you're representing a seller, calm your client's fears. Okay, inventory is up, but don't worry, the number of sales is flat to last year or down slightly depending on the city or price point you're in. We've reviewed our competition. We know our competition is still in line with us, so we're good. If you are seeing your competition selling and you're not moving, then you may have to have that hard conversation with clients. Take them out. So Dean, I'm going to use you as an example here. If your house isn't moving, have you taken your clients out or have you gone and previewed those other comparable homes?
Yes, I've sent them through other open houses of those properties for them to see it.
Perfect. And you've gone out to see the other homes as well, right?
Correct.
Yeah. And you're still, like, after you've done that, you're confident in your price?
Yeah, super confident. Again, feel free to have a look at it. But from where we sit, we're actually underpriced versus looking at everything else, square footage, pool, so forth. I think the only downfall with my property from the feedback I've gotten is the reno or the bathroom, the ensuite bathroom is a little dated. Still a functional bathroom, looks great, but it's dated. But beyond that, everything else is up to par. In the last 5 years, everything's been done. So you don't have to worry about pool liner, roof, window. Everything has been done on the property. So
and at the end of the day, guys, that's all that we can do, really. So Dean is having conversations with his clients. He's keeping them updated on what their competition is. They're seeing the property so they know how they compare. He's done market analysis to say, okay, yes, this is our strength, this is our strength, maybe this is an opportunity. I think after that, the only thing I would look at is there a simple cosmetic thing that you can do, whether it's staging, painting, decor in a bathroom to make it feel more updated than what it is. Bathroom, sometimes you can add textiles and different things to really distract. And then other times, unfortunately, ugly tile is just ugly tile.
Yep.
Let me just see. Sorry, Dean, I actually logged out of the report, so I can't pull it up into Brooklyn, but I'll take a look for you. What's your address? You're listening.
It is 41 Underwood.
Underwood.
41 Underwood Drive.
Okay, I'll take a look into it and just get you some information on that. Any other questions before we sign off, guys? No. Next week is the long weekend, so we won't be doing a call next week. All the information will still be uploaded into the system on Monday morning. I'll still get the report done there for you. So if you're having any conversations with clients, feel free to pull it from there.
Sorry,
and then again,
I had a question. Sorry.
Yep.
Could you did that little formula. I didn't get all of it on the inventory. Is there any way that you could send that in the chat or in an email or something like that, just so I could pull that up and have that in front of me and I can show that?
So it's always new minus old minus one.
Oh,
so
new minus old minus one. Okay.
Yep. So new minus old, it will give you, and then minus one, and that will give you your percentage.
Thanks,
so for let me pull it up here. I'll just do it while I'm actually on the phone with you guys. Window. Okay, so let me flip to Ajax. So Ajax has 178 homes. So I'm just getting my calculator. 178. Sorry, I said new minus old. It's not new minus old. New divided by old. So 178 divided by 105 gives you 1.695. So if you minus 1, it gives you the percentage. So 69.5% inventory
so
increase.
it's this year's active listings divided by last year's
active. Yep. And then minus 1. And then just remember that's as a percentage. So if you see 0.6952, you can times it by 100, or just know that the first two is 69% and round up. Again, if we were to do Pickering, it's going to be 232 homes divided by 127, which is 82.67%. But take it as a positive, guys. There is a lot more people that want to transact this year versus last year. It's just trying to get things to line up. So is it motivation? Is it price? Keep an eye on your terminations and your price drops, because that's where, if you have sellers, you have to be really conscious of that and get in front of it before other people do. All right, guys, that's it for today. I'll see you in 2 weeks. If you have any questions, any calls, or any questions, just give me a call, send me an email, shoot me a text, and we will see you guys in 2 weeks. Awesome. Have a good one, guys.